Good morning, everyone, and welcome to the Ankerstar Wealth Market Update. I'm your host, Allison Ankerstar, and today we'll be talking about the inflation number that was released this morning. Then we'll talk about the IPO of Black Rifle Coffee Company, who will be ringing the opening bell today. And last, we'll answer the question, what is a custodial Roth IRA? But before we begin, as a reminder, this is a financial education presentation and should not be construed as personal financial advice. Full disclaimer information is available at ankerstarwealth.com. Good morning, Steve. The inflation number out this morning was 7.5%, the worst inflation numbers since 1982. What does this mean for the markets?
Well, good morning, Allison, and thank you for that intro. The inflation number this morning was just terrible. So 7.5%. When you think of that, here's the history. So last year, it seemed like inflation was running hot, and it ended up 5.9% on the year. So far in January, it was 7% year over year. And then, and again, these are year over year numbers, not month to month, but now 7.5%, as Allison said, worse since 1982. Well, so that's the disease in this case, is things are getting more expensive. So we haven't really seen a huge run on inflation since the 80s, right? And to combat inflation, the Federal Reserve, their mandate is to keep inflation under control. Nominally, they use 2% as the number that they're shooting for. And obviously, we're not very close to that number. So what are they going to do about, which is the cure? So the disease is bad, but the cure could be worse. And that's what's going to spook the heck out of the markets today. So when you look at the chart here, this is again the S&P 500 year over year. We've had a great run from the past couple of days, starting to kick over to some new highs, that sort of things in some certain names, not obviously not in the overall market there. But when you look at it, nice run up. And today we're going to see something like this, where the far left there, that was the announcement for the Federal Reserve, for the 7.5%, and going to head straight down, really. So what spooks people out, or what people are going to price in now, is coming off of Chairman Powell's last meeting, where he kind of forcefully said we're going to have 3 rate hikes. In so many words, people are speculating what that could exactly mean, but I don't know, it seems like 3 to me. Now, this morning, people are talking about 3 to 7 rate hikes. And instead of ending 2022 with an Federal Reserve driven interest rate of, that 0.75 to 1%, now people think you might actually get 7 raises all the way up to 2% Fed rate. And when you really think about the Fed rate, it's a little more complex than that, because the market actually has its own interest rate that is market driven. So here's CNBC.com. If you ever want to look at this stuff, it's over here under the bonds tab. And then the 10-year is your best barometer for that. And it's almost 2%. So really, when you look at this chart, look at that move up. This is the Fed not doing anything yet. This is the Fed only talking about doing something, and it's almost 2%. I think we actually have a pretty decent chance of cracking 2% today. So how does that parlay to real terms of what you care about? If you haven't refinanced your mortgage, well, the window's probably closed. Maybe not forever, but certainly for the foreseeable future. But so we'll see. The market's going to be in the red today. There's no doubt about it. We've had a nice recovery from the previous sell-off, so this could be a multi-day red thing, depending on how everybody digests the information. But it's really it's what the Fed will decide to do, and they won't really talk about it, right? So it'll be a lot of unknowns until the next Fed meeting. So really, that is the problem that the Federal Reserve has to solve here.
Switching gears to the Black Rifle Coffee Company. They IPO today and are ringing the opening bell. Will this company be a good investment?
Well, sure. Well, let's talk about the company itself for a second, which is here, just this next tab over. So if you're not familiar with Black Rifle Coffee, I am, because I have my whole initial cadre of folks were military, and I'm, of course, retired military, and coffee is a big part of the in military environment. Interestingly enough, I did not drink coffee while I was on active duty. I picked it up afterwards, but I love coffee now. It's a part of my daily routine. And that's what's attractive about coffee companies in general. thinking Starbucks, and I'm a fan of Luckin Coffee over in China. It's high margin, right? Coffee beans only cost so much, and then you have the labor costs and deliver, storefront costs. Other than that, your margin on a cup of coffee is insanely huge. That's why I like it as an investor. Now you take Black Rifle Coffee Company, which is kind of the anti-Starbucks, right? Starbucks leans pretty far left. Black Rifle Coffee Company actively leans pretty far right. You can see that in their branding. It's really pro-military, and they have all these cool names for their roasts. Thin blue line, coffee or die, just black, CAF. Who knows what that stands for? 5 alarm. I mean, it's just cool stuff. And you get into their apparel, and it's just cool. It's cool. Everything about it is cool. I try to brand my company, black and white and everything cool. It's not, not even in the ballpark of cool compared to these guys, right? So that's kind of the attraction, is high margin. You've got a very sticky customer and veterans and folks that are doing everything they can to support the military. And then when you look about how it came about, I've actually been in this name for months, and so have my clients, under the ticker SBEA. So when you look on the chart here, it's the second panel. This was a 20% up move tomorrow that I'm just kind of circling with the mouse there. And it's a SPAC, special purpose acquisition company, meaning a blank check company, if you've heard that, under the ticker SBEA. And then Black Rifle is going to ring the bell here in 25 minutes. And then they're going to switch their ticker to BRCC sometime today. I don't know exactly when, but you'll see that on your statements if you're a client. So 20% up move today. What's it going to continue, or yesterday, what's it going to continue to do? Sticky customers, veterans. I do think that they move up. I like the company. So yes, overall, I think that it is a good place to have some of your money.
Last question. What is a custodial Roth IRA, and why should someone consider opening one?
Okay, a custodial Roth IRA is kind of a hidden, I won't call it a secret, but certainly it's if you've ever seen the, if you know sort of thing. Well, it's right here. Here's the IRS rules, and that's like yawn, tune out, right? Because IRS is boring. But what a Roth IRA does for you. It allows you to get money and you pay your taxes now. I call it eating your vegetables. You eat your vegetables now so you can enjoy the good stuff later, right? So it is the ultimate of pay my taxes now and then let my money grow tax-free. Well, what if you could let your money go tax-free for 6 to 7 decades? That's pretty good, right? Well, guess what? The only people that can do that are folks like Allison, not a 50-year-old like me, right? I was very blessed. So the point will be your kids have to be working, or a younger person has to have earned income, either W-2 or 1099, not babysitting, not anything that might be off the books. But if they have a legitimate tax form that demonstrates their income, you can open a Roth IRA for them. They're in the tax bracket to where they generally probably are not, unless they're a child star or influencer of some sort. They're probably not making over the $100,000, which is going to prohibit you from opening a Roth. You'd have to go traditional at that point, and a not get a tax break. But assuming they're making, up to $6,000, you can take the entirety of that money and put it into custodial Roth IRA. So in a situation like, for example, somebody makes $1,800 of legitimate income. My parents, when I was growing up, they said, hey, get a job. And the IRA limit back then was 2,000. Or said, hey, get a job. And, you work your job. It's good experience anyway, as a child to work a job. And you keep the money, and we're going to match that into your IRA, which is perfectly legal, because, the dollars that are earned don't have to be the dollars that get contributed. Right. So they're just dollars. So in the case of, if you have a child that's working, let them keep the money. If you have the cash flow to be able to do it, match that money. So say it's $1,800. The child keeps $1,800, match that $1,800 into a custodial Roth IRA for them, and then let it grow for like 70 years. In that case, you could either do an index fund if you just want to buy like the SPY or the QQQ for the NASDAQ. That's fine. Or pick a company and just buy a couple shares of the company and let it grow. Right. So that's why you'd want to have one of these, because it's not timing the market that's important. It's total time in the market. So that's why you should have one of these if you have any questions, because it can be a little bit complex. It does stay in the adult's name until they turn to the age of termination, which is different state to state. In the Texas is 21. But there's so many benefits to doing this. If you can do this for your kids, you'll be setting them up for success. So that's why you should take advantage of the opportunity.
Thank you, everyone, for your questions. Please submit your questions at a comment through social media or directly to our email at vipservices@ankerstarwealth.com. That's all we have for today's show. I'm Allison Ankerstar, and we'll see you back here tomorrow.
Thanks, everyone.